Hello, and welcome to another video of the investing course for beginners. Today, we're diving into one of the most popular and versatile investment tools available to modern investors, exchange-traded funds, or ETFs. Whether you're new to investing or an experienced investor, understanding ETFs is crucial. These investment vehicles offer a unique combination of diversification, cost efficiency, and flexibility, making them a favorite choice for both beginners and seasoned professionals. In this video, we'll explore what ETFs are, how they work, how we can use them as investing tools, what to pay attention to, and also show several examples of different ETFs. I'll show you different examples for thematic ETFs that can fit your portfolio. As a reminder, we are still in the first section of the course, Understanding of the Stock Market. During the course, we'll cover all the important topics for beginner investors, up to the point where you'll be ready to invest on your own and reach your financial goals. As you can see, this course is completely free on YouTube, and all I ask is your support. So if you enjoy the course and find it helpful, please like and subscribe. Before we start, if you want to learn more about investing and you are interested in managing and growing your own capital, please visit my website for more advanced courses. You can also join my investing community on Patreon, where I share my portfolio, bring up new investing ideas, summarize earning calls, and discuss various topics related to investing. You can find all the links in the description below and in the pinned comment. Okay, so let's start with an explanation of what an ETF is. An ETF, or exchange-traded fund, is essentially a basket of investments such as stocks, bonds, or other assets that you can buy and sell on a stock exchange, just like a regular stock. The beauty of an ETF lies in its simplicity and flexibility. Think of it as a middle ground between individual stocks and mutual funds. Like a mutual fund, an ETF provides diversification by holding multiple securities, but unlike mutual funds, it trades throughout the day at market prices, just like stocks. This means you can buy or sell ETFs at any time during market hours, giving you greater control and liquidity. ETFs also typically have lower fees than mutual funds, which is one of the reasons they've become so popular among investors of all types. ETFs were invented to solve a problem that many investors faced: the need for a simple, cost-effective way to achieve diversification. Before ETFs, investors often turned to mutual funds for diversification, but mutual funds came with several drawbacks. They could only be traded at the end of the day, had higher fees, and often lacked transparency. ETFs have become very important for thematic investing, allowing investors to target specific trends, industries, or ideas with remarkable ease and precision. Thematic ETFs are designed to capture the growth potential of emerging themes, such as artificial intelligence, clean energy, healthcare innovation, or even societal shifts like the rise of e-commerce or electric vehicles. They provide instant diversification within a theme, investing in a curated selection of companies that align with the chosen trend. This makes them an attractive option for investors who want exposure to high-growth areas without the complexity of picking individual stocks. Additionally, thematic ETFs allow investors to align their portfolios with personal values, such as supporting environmental sustainability or technological advancement, while still pursuing long-term financial returns. Before investing in an ETF, it's important to know what's really inside the ETF. Don't just count on the ETF's name, but check if you're okay with the companies or assets inside. To check what's inside the ETF, use the Yahoo Finance website. Let's take an example of an ETF tracking the semiconductor industry, ticker SMH. Just type in the ticker into the search bar and select this ETF. Next, click on Holdings on the left menu. Here you can see the 10 top holdings in this ETF and the weight of each holding inside the ETF. As of now, the second holding is Taiwan Semiconductor Company, ticker TSM. Maybe some investors would not want an exposure to Taiwanese companies because of the geopolitical risk, and therefore would like to avoid this ETF and instead buy an ETF holding only US-based companies. Another thing that is worth talking about is management fees. ETF management fees, often referred to as the expense ratio, represent the cost of operating and managing the fund, expressed as a percentage of the fund's total assets. These fees are deducted automatically from the fund's returns and cover expenses like portfolio management, administration, and legal compliance. One of the key advantages of ETFs is their low expense ratios compared to mutual funds. This is because most ETFs are passively managed, tracking an index rather than relying on active stock picking, which reduces costs. For example, a typical ETF might have an expense ratio as low as 0.2%, meaning you pay just $2 annually for every $1,000 invested. However, it's important to remember that higher-cost ETFs, such as actively managed or thematic ones, may still offer value if their performance justifies the fees. As investors, understanding and minimizing management fees is critical to maximizing your long-term returns. You can see what is the management fee of a certain ETF on Yahoo Finance when you search the ETF ticker, or you can go directly to the ETF's website. For example, this ETF that follows the top Canadian stocks has an expense ratio of 0.5%. Okay, so now I want to show you some ETFs that you can use to invest in different types of themes. Let's start with the most popular ones, and these are the ETFs following the American indexes. Ticker SPY, following the S&P 500 index. Ticker QQQ, following the NASDAQ index. Ticker DIA, following the Dow Jones index. And there is even a world index, ticker VT. There are ETFs following the stock market of almost any country in the world. For example, ticker EWZ, following the stock market of Brazil. Ticker EWH, following the stock market of Hong Kong. Ticker INDA, following the stock market of India. You can find ETFs following a specific sector like ticker SMH, following semiconductor companies. Ticker KBE, following the bank stocks. Ticker KWEB, following Chinese tech companies. Ticker XBEI, following biotech companies. Of course, these are all just examples, and you can find ETFs following a wide variety of specific industries. There are also ETFs following specific industries inside the S&P 500 index, like energy, financials, technology, and so on. You can also invest in commodities using ETFs. Ticker GLD, an ETF following the price of gold. Ticker USL, an ETF following the price of oil. Ticker WEAT, an ETF following the price of wheat. And even an ETF following the price of uranium, ticker URA. You can also find inverse ETFs, meaning the price of the ETF will go up when the price of the underlying asset is going down, and vice versa. Ticker SH is the inverse ETF of the S&P 500. Ticker PSQ is the inverse ETF of the NASDAQ. And ticker DOG is the inverse ETF of the Dow Jones. You can also use leveraged ETFs, an ETF that goes up twice or even 3 times more than the underlying asset. For example, ticker QLD is 2 times leveraged NASDAQ ETF, or ticker XPSL is 3 times leveraged S&P 500 ETF. So, as you can see, there is a huge number of ETFs for almost every investing purpose you can think of. They are accessible from every brokerage platform, easy to buy or sell just like a stock, and a great way for passive or thematic investing. That's all for today. Thank you for sticking till the end. If you like the content and want to support the channel, please like and subscribe, and see you in the next video.